All right, folks, we should get started.
It's really lonely over here now. I'm just saying.
Come on over here.
No,
Yep. Sound good?
Good evening, everybody. Good evening, everybody. I need a motion to call meeting to order. Second, thank you. Now on regular meeting, but now we need to go into the audit. So motion to go into the audit. Meeting. Second,
Second.
okay, now into the audit.
I want to thank everyone for coming tonight, and those of you who are watching from home. This is a half-hour meeting. We're going to have Rhonda introduce our auditors and kind of explain the process, and we'll get right on the go.
Yeah, so Mr. Chris Ngata is here from Milwaukee Smith, and he's here to present the audit from the 22-23 fiscal year end. So welcome.
Thank you. Thank you, Rhonda. Good evening, everyone. Rhonda said I'm Christopher Ngata, partner at the firm Milwaukee Smith. And I am here with you all this evening to present the results of the June 30th, 2023 fiscal audit. I did just pass around a presentation to the committee members, which also includes the draft of the financial statements. The presentation will be a walkthrough of this year's audit, as well as the key highlights to the financial statements this year. I'll start on page 1 of the presentation just to confirm the scope of our services. Milwaukee Smith was retained by the district for an audit its financial statements for the year ended June 30th, 2023, in accordance with professional standards. We also performed a single audit of the federal award programs administered by the district in accordance with the uniform guidance. We performed an audit of the district extra classroom activity funds, and those are on the cash basis of accounting. And then finally, we contemplate issuing a management letter presenting any findings or recommendations on approving the accounting procedures and internal controls for the district. I'd like to take a moment just to discuss the conduct of the audit, what I like to call audit readiness and responsiveness. I'd like to commend the district on a satisfactory closing of its books and records this year. Our field work did commence this year, the week of August 14th. And I'd like to cite the excellent audit cooperation that we received throughout the course of field work, mainly with respect to Rhonda and Eleni and their entire team throughout the course of the process that, responding to all of our requests in a very seamless and efficient manner that allows us to be here with you all this evening to present the results of the audit. As a result of our audit this year, we did not have any audit adjustments proposed to the financial statements as presented to us, and all of our planned audit procedures were successfully implemented. The next couple pages of the presentation is essentially a walkthrough of the district's financial statements for the year. You'll note as I go through the presentation, I've indicated the page numbers that refer to the financial statements, which, as I mentioned, there is a draft of the financial statements in the back of the presentation. The first 3 pages, as well as pages 64 and 65 of the financial statements, is our audit report, which I'm happy to report to the board this evening that we did issue a clean or unmodified opinion in our audit reports, essentially meaning that the financial statements of the district present fairly in all material respects in accordance with our professional standards. Pages 4 through 15 is the management's discussion and analysis section of the financial statements. This section provides an overview and analysis of the financial statements. It is actually the only area of the financial statements that provides comparative financial data and key analyses on key variances on a year-over-year basis. The majority of this section is on the full accrual or the district-wide financial statements, which is a nice segue into those actual financial statements. So the full accrual financial statements for the district-wide financial statements are those financial statements that align with that of a private sector company, because it includes all of the district's long-term assets and liabilities, their long-term assets being capital assets, long-term liabilities being debt that is issued. I always like to start off with some comparative ratios since it is the complete picture of the district. Current assets this year, which total about 26.5 million.
Which page are you on?
I'm on page 3 of the presentation.
Okay.
Total current liabilities this year were 18.6 million. The district had working capital of about $8 million for 2023, and a current ratio about 1.4 to 1. So your working capital is a result of your current assets minus your current liabilities, and your current ratio being the ratio of your current assets to your current liabilities. There was some significant changes on a year-over-year basis. If you look at the chart on page 3 of the presentation, the main reason for the change in current assets was an increase in cash for the year. And the main increase for the increase in the current liabilities was the bond anticipation note payable that the district had outstanding as of year end. Talk about some of the additional long-term assets and liabilities of the district. Capital assets this year, a net depreciation totaled 63.5 million with a net increase of 67,000 in the current year. So that just means that the purchases of capital assets exceeded that of depreciation for the current year. Inclusive in capital assets are the right to use assets. So if the board recalls, last year the district had to implement GASB 87 with respect to leases. So those lease arrangements that were recorded by the district are inclusive in the capital assets. Bonds payable this year net total about $19.4 million and reflect current year payments of about $2.5 million. The energy performance contract totaled about $7.1 million, reflecting current year payments of about $941,000. The lease liabilities that relate to those right-of-use assets as part of the implementation of GASB 87 totaled $1.3 million. Perhaps the two most significant dollar amounts on the organization's or the district's district-wide financial statements are that of the other post-employment benefits and the TRS and ERS, the Teachers Retirement System and Employee Retirement System pension plans. So the OPEB liability this year was about $157.3 million, with a net increase of about $12.5 million in the current year. There were current year payments of about $4.9 million. And if you actually look at page 56 of the financial statements, there is a detailed analysis of the OPEB liability on a year-over-year basis for the last five or so years. Really, so you can see the true ebbs and flows. The OPEB liability is determined by the district's actuary and is based on a ton of assumptions that are utilized by the actuary to calculate the future projected liability of the district. The two other pension plans are the TRS and ERS plans. Last year we discussed the plans being in an overfunded position, so the district shared in the asset side or the overfunded position of those plans because of the negative overall market change for the last fiscal year. The plans are back into a underfunded position. So the district is now sharing once again in the proportionate share of the liability of those plans or the underfunded portion. So the liability this year on a cumulative basis between the two plans is about $11 million compared to a net position or net pension asset in 2022 of about $39.2 million. So on a year-over-year basis, just based upon realized gains and losses within those plans, the swing for the district was about $50 million. I'll talk a little bit more about the current focus financial statements. These are the governmental funds. These are the funds that the district uses to account and record for all of its activities throughout the course of the year. Obviously, the most significant fund being that of the general fund. Total assets this year were $40.8 million. Total liabilities were about $9.2 million, leaving the district with fund balance of $31.7 million. Of that $31.7 million, $2.9 million was unassigned. $834,000 was committed fund balance, leaving the district within the allowable New York State 4% statutory limit. $6.2 million was assigned funds. That's broken down into two pieces: $3 million appropriated for the subsequent year's budget and $3.2 million in encumbrances. There was $86,000 of non-spendable fund balance, which relates to the difference in the lessor lease arrangements that the district has, leaving the total restricted reserves of the district being $21.7 million. The chart below does detail the reserves utilized by the district and their balances on a year-over-year basis. Obviously, the one that stands out the most is the capital reserve, which was voted by the district and was funded this year of $1 million.
Okay. Just one question.
Sure.
The 834,000, what percentage does that represent as an unrestricted or unassigned fund balance?
So that's within, so.
It was within, I know, do you know what the ratio actually was? Was it 3? Was it?
So the district was at 3.63%.
Okay, 3.6.
Yes. So under New York State Education Public Guidelines, it's the combination of unassigned and committed fund balance that totals, you have to be within that for the 4% statutory.
Okay, good. Thank you.
The table on top of page 5 of the presentation is just really a trend analysis of the fund balance of the district over the last 5 years. Really just showing, each level of fund balance that the district had within its general fund, the committed, the assigned, the restricted, so on and so forth. Really just like to give that trend for the board so you really can gain a sense as to, the ebbs and flows of fund balance on a year-over-year basis. Looking at the activity for the year, total revenues in the general fund were about 95.2 million. Total expenses were about 96.3 million. Other financing sources this year were about 510,000. That represents the issuance of the new leases, as well as transfers to and from other governmental funds. Leaving the negative change in fund balance for the year of about 584,000. When we look at the general fund in comparison to the approved budget, the district was over budget in revenues by approximately $1.9 million. That was primarily due to interest, which we're seeing across the board, all of our districts this year. Obviously, interest rates are much higher than they were or could have been anticipated during the budget process, and that overage in revenues was about $1.8 million. And the district was under budget in expenditures by about $463,000.
If I might just interject, also part of the revenue was the ability to bring into the general fund prior expenditures on the ESSER 2 and Gear 2. Yes, that was a large piece of that too.
Plus, I mean, 463,000 in a $100 million budget. That's pretty good.
Pretty tight.
The next couple of funds, on the next couple of pages, are the remainder of the governmental funds. Start out with the special aid fund, which is the fund that the district uses to account and record for its state and federal grants. This is a fund that typically does not have any fund balance. The assets equal the liabilities. Total assets and total liabilities this year were about $2.1 million. Total revenues, 3.7 million. Total expenses, 3 million. And other financing sources, it was actually a use this year of about 698,000. And to Rhonda's point, that was the transfer back to the general fund to cover those previous year expenses. And the increase in the federal funding this year was primarily due to those ESSER and Gear grants, which were greater this year than they were in prior years. The next fund is the school lunch fund. Total assets this year were 574,000. Total fund balance 507,000. The total revenues and total expenses, both, the total revenues did decrease from last year, about 279,000. Last year, the district had a higher federal reimbursement rate due to the federal government increasing that rate and allowing to give the students meals for free in 2022. Those rates are now back down in 2023. Thus decreasing the overall revenue of the fund. I will note that the school lunch fund balance is in excess of the New York State limit, which is about 3%, 3 months of operating expenses. So if you look at the total expenses for the year of about $1.2 million, divide that by 10 months, it gives you about 120. So it's about $360,000 you could have in fund balance, sitting with a fund balance of about $500,000. Obviously, the district is over in terms of that. However, the district does have a plan in place to utilize that funding or that additional excess of fund balance. But we're seeing this across the board at all of our districts because of the increase in the federal reimbursement rate over the last couple of years. The districts have a surplus or an excess in their school lunch fund. And the only requirement by New York State is that you have an accepted plan. So as long as you're filing a plan with New York State and it's formally accepted by them, the district is in compliance. But there is a lot of restrictions that, with that fund balance that you can be utilized for. So a lot of what we see is it's used for capital purposes, whether it be for equipment or additional salaries, things of that nature. There are a lot of restrictions, but the district does have a plan in place to spend down those excess funds.
Could that money be used for, say, students that have unpaid balances?
You cannot. Biggest question I've gotten over the last couple of weeks.
Seems so sad.
And with the free meals, it probably has grown, because it was like, we went from one shift to another and then back again.
Well, they said the
No
people were,
shaming.
the families that were right at that cutoff when they stopped giving the free lunch are the ones who got hurt the most, and they probably still have balances. So that's pretty sad. Okay, thank you. Not your fault.
The next one is the capital projects fund. Total assets this year were $6.7 million, total liabilities $7.9 million. Obviously, big increases this year related to the bond anticipation note payable at year end. Total revenues $732,000 relating to the state grants. Total capital outlay this year was $3 million. On page 60 of the financial statements, there is a detailed analysis that shows the ongoing capital project of the district, shows the capital expenditures within each project, the funding sources, so on and so forth. So that's always a great supplementary schedule to take a look at, and if you were curious as to the ongoing projects of the district. And the last fund is that of the other miscellaneous special revenue fund, which was created as a result of GASB 84 a couple of years ago. This includes the district's extra classroom activity funds, scholarships, and other special purpose activities. Total assets this year and total fund balance was about $1 million. Total revenues and total expenses on a year-over-year basis pretty consistent. Page 22 of the financial statements, on page 8 of the presentation, are the fiduciary fund financial statements. These financial statements, or this financial statement, represents the relationship where the district acts solely as an agent or trustee for the benefit of others. So the activities that are displayed or detailed on these financial statements relate to the property taxes that are passed through to the library, as well as the Sayville Historical Society. Pages 23 through 54 of the financial statements are the notes to the financial statements, all of which are in accordance with New York State education guidelines. And the presentation is pretty consistent on a year-over-year basis. I'd like to mention that there was a new standard that needs to be implemented by the district this year with respect to subscription-based IT arrangements. However, there were no arrangements that met the requirements of that GASB 96. Thus, there are no additional note disclosures that needed to be added to the financial statements this year. Thus, the presentation is consistent on a year-over-year basis. Pages 55 through 61 of the financial statements are the supplementary schedules. These are consistent once again with the prior year. There have been no changes in the requirements. These schedules are required either by the Governmental Accounting Standards Board or the New York State Department of Education. I've listed those schedules there for you. Once again, no changes, just additional information added for the current year activity. Pages 62 through 70 are the pages of the financial statements that relate to the federal civil audit procedures. I'm happy to report to the audit committee this evening that we did issue an unmodified opinion on audit reports. We did audit 2 programs as major this year. Those relate to the Education Stabilization Fund. Those are the ESSER and GEAR federal funds, as well as the Special Education Cluster, that is 611 and 617. Happy to report that we had no findings, no question costs, no compliance findings. So a clean opinion with respect to those procedures and those programs. And finally, the extra classroom activity funds. Once again, we issued a cleaner unmodified opinion with respect to those activities. And those once again are presented on the cash basis of accounting. In terms of findings and recommendations, as I mentioned at the onset of the meeting, contemplate issuing a management letter presenting findings or recommendations on improving accounting procedures and internal controls. I am happy to report that we did not cite the district for any material weaknesses or significant deficiencies in internal control. We did have one current year recommendation, which really is a best practice recommendation, resulting from the implementation of both GASB 87 and GASB 96. GASB 87 being for leases, GASB 96 being for the IT arrangements. New York State Education Department has suggested that districts create a capitalization policy so that you have a policy to refer to when you sign on new leases or IT arrangements. It would be similar to that of your capital asset policy. So setting a threshold for those arrangements. So we've provided the districts with a templated policy that can be utilized to be put in place so that you are in accordance with those guidelines.
There's a corrective action plan on the right one.
Yes.
For this evening.
And then finally, anytime an independent auditor meets with the governing board or oversight committee, there are certain communications we are required to make to you. First, that our responsibility is to perform the audit in accordance with our professional standards. That all significant accounting policies as well as management judgments and accounting estimates were adequately disclosed. We had no disagreements with management nor difficulties in performing the audit. All current accounting and auditing developments were fully considered, mainly GASB 96. There are no contrary judgments to the quality of the district's accounting principles. As I mentioned, we had no audit adjustments that were proposed. We also had no audit adjustments that were passed. And our firm, Naraki Smith, is independent with respect to the Sayville Free School District. And that would conclude my presentation for this evening, but I'd be happy to address any questions or additional comments that the committee would have. Thank you.
No, I mean. Once again, once again, I think it's an outstanding result from the audit. And I'm always glad to hear that, you know, things are working well with the district. Thanks to the physics department.
Yeah, a big shout out to Eleni Costello. This is, she puts a lot of effort and time and very conscientious. So I'm blessed to be working with her. And thank you. What a very thoughtful presentation. So thank you. I appreciate it.
Thank you so much. I was also happy to hear when speaking with Rhonda earlier that we do have a plan to make sure that we're scheduled early, right in December, so that we make sure we get our dates in.
We'll set like the calendar. I'll work with
Yeah.
Chris and John and plan that out.
Perfect. Thank you.
Thank you.
Thank you.
Yeah, so I think if we can go into executive session.
Do we, as far as the other items on here, with the risk assessment. Update on anything like that, any.
So, you do make a resolution, I guess, you do pass a resolution, I guess, within the audit committee meeting for the corrective action plan, and I guess acceptance of the audit and, approval of the audit, and then also, there was a corrective action plan that was put forth for the update to the risk assessment that was done in June. But we couldn't find the formal acceptance of that, but
So that's why we're doing that.
yes.
Okay.
We just have to do the approval of the minutes and the resolution
Okay, sure, hold on 1 second.
action items.
Yeah, so we're done with the reports, so then I'll need a motion for items 301 through 304, motion,
Motion.
second,
Second.
any discussion? All those in favor? Passes. Thank you. Okay, that concludes the audit committee.
I'm just gonna walk.
And